Welcome to Investor in the Family Radio, a podcast dedicated to helping you make better investments in less time so you can live more life. My name is Brian Bain and I'm your host. You can find more shows and other valuable content at investorinthefamily.com. Well, on today's show, we have ALT Perspective, a contributor from Seeking Alpha, who recently wrote an article on iQIYI entitled iQIYI, The Need for Caution Has Intensified. So, ALT, welcome to the show.
Hi, Brian. Thanks for having me here.
Absolutely. Well, it's a pleasure to have you with us. We appreciate you taking some of your time to speak with us today. And do you mind, well, actually, you and I had a brief conversation before the interview started about how actually that I think our listeners may appreciate, and that's specifically, how do you appropriately pronounce the name of this company?
Well, I'll call it the iQIYI, but for the convenience of us in this podcast, I think we will just use the ticker name iQ.
Right. No, and which I appreciate. That's definitely a little more smooth. But I always like to be able to when I see a word, I want to be able to know how to say it correctly. So can you say it one more time?
iQIYI.
iQIYI.
Right.
Was that close?
Very close.
Hey, very close, but not quite. I appreciate that. Okay, well, let's do this. Well, tell us. Can you tell us a little bit about the company iQIYI as a company? Like, what is the company? What do they do? What's going on there?
All right. Okay, before this article, I had an initiation, which is titled also similarly, Why Investors Need to Be Cautious. There, in the article, I did some introduction. So essentially, we just term it as what the company wants it, which is the market-leading online entertainment service. But it's a video streaming service. And similar to Netflix, is trying to create its own content, which some of them have gone on to be quite popular. But definitely it can't survive on its own content. So it's also doing some partnering and licensing. So what often people like to call it is a China Netflix. But for the company itself, the CEO is trying to steer the company towards like Disney. So not in terms of building theme parks,
right,
but more of trying to build a sustainable business in the sense that they are using their content on video to move on to other fields like say merchandises, toys, or say related to advertising to their videos. So it's not just trying to be a video streaming company, but it's trying to be more comprehensive in their business revenue.
Well, and that's, I feel like, not an uncommon dynamic that takes place or has taken place in recent years, where in the U.S. you've got a company that's had great success, whether it be Amazon or Netflix or any number of other companies. And then in China, you've got a lot of technology companies that have had incredible success. And part of it, with China, maybe does not allow certain U.S. companies the same level of freedom to interact in China, which has opened up the door for a lot of Chinese companies, whether that be Alibaba, Tencent, JD, and so on and forth. And then in America, it's like, well, how do we make sense of this company? And then we'll say, well, it's the Amazon of China, or it's the Amazon, eBay, and they'll add like 5 different companies to try to explain what Tencent actually is, when in reality, none of them actually fit the exact mold we're trying to force them into. So do you feel, and you kind of share that a little bit there, people say it's the Chinese Netflix, but the CEO of iQIYI says, actually, we're more like Disney. Do you feel that that Disney is probably the best comparison there, or is there actually more to it than that as well?
Okay, the CEO is trying to find some company that relates to the US investors.
Right.
So, of course, they're not just going to be a Disney. They are not going to be creating movies for theaters, or that's not the intention, but they do have their own private theaters, but that's another topic of discussion. But so mainly they are trying to connect to the investors. In my article, I mentioned like Angry Birds creator, Rovio. They did their games first, as you know. Then because the game turned popular and it's highly successful, so they went on to make movies out of it, and of course the merchandise, you say those soft toys. So it's in that sense, they're not just emulating Netflix, but or Disney, So it's more of trying to go horizontal, going to more vertical model instead.
Right.
So they have something, then they going to, what they can do about it instead of just creating more and more videos.
Right. So what else is important for investors to know or understand, like especially US based investors who are not actually in a position to use iQIYI? What else do American investors need to know about this company before investing in it?
Okay, for that, I think my article attracted a few readers who commented on the usage. I have one particular reader that made a good effort and shared with us his insights. His name is Recluse, or or rather his pen name, Recluse.
Recluse?
Yeah, Wreckers. That's his nickname on Seeking Alpha.
Okay.
Yep, he basically tried to warn readers of my article that the iQIYI is actually part of a trial with Huya and Billy that investors need to take caution on, which precisely what my title suggested. Although I'm primarily thinking that iQIYI is worthy of investment since it's still at the early stage, just IPO a few months back. There's a lot of momentum going on with it, and the story is just starting. You would call it the early days of Netflix, and those that do not want to miss the train again on this video streaming, then they can look at iQIYI. But there are certain issues that US investors or investors in general will need to take caution, we need to watch out for. After all, it's a company based in China, which we may not be very fully transparent on. So what this reader also trying to warn us is that there could be issues that we are not privy about. It was a very, very long comment, but basically I think he's trying to tell us that there are issues in China that we may not understand because of the context that we are familiar with in the US or in Europe. So I think it is very kind of him to spend the time to provide the insights from maybe a Chinese perspective. But of course, we have also bullish readers who are looking at all these comments as something that is they call it FUD. Is
right.
In the,
yeah.
So
fear, uncertainty, and doubt. Is that what it is?
Exactly.
Yeah. Yeah.
So it's good. Really, the basis of me coming to write for Seeking Alpha, because I'm also an investor myself, and writing this article will attract. As these are precisely my motive, trying to attract views from both sides. Especially for in the Chinese market. I do go to China now and then, but I'm not based in China or I'm not living in China as well. So I really appreciate that readers who have more insights or the users of the services of the company that I write on, they provide their experience.
Right.
So it's very useful.
And so when investors are looking at, I'm scrolling through the article, trying to find the comments you're talking about, but I'm not finding them right now real quick. But so as investors are looking, US investors looking at iQIYI and learning about this, it's, compared to being the early days of Netflix, but of course then there's the classic issue of, the concerns as well. In the early days of Netflix, Netflix was a great investment because people weren't thinking of it as the early days of Netflix. They're thinking of it as, maybe a struggling tech company that wasn't sure what it was doing, or, that just cut off its DVD branch and, was having a lot of backlash from investors and customers. And, you look at Netflix in the early days, people didn't know what it was going to become, and that's arguably maybe even still true of Netflix today. But when people say iQIYI is the early days of Netflix, that creates people now know, well, that's a big deal. And so do you feel like from a valuation standpoint that iQIYI is still as good of an investment or potentially as good of an investment as Netflix was in the early days, since now iQIYI is already kind of revealed as having that potential. Does that make sense?
Right. So my premise for saying that it can be a buy because it's we're trying to buy into the story instead of the say fundamentals. So in my second article, I tried to delve into the financial numbers, and it doesn't look really nice. For instance, that's what Reckles also agreeing. I brought in the topic on the last quarter where they have foreign exchange loss reduction. So in the first quarter of 2017, it was a loss. Then for quarter 4 of 2017, they actually recorded a gain. This can make a big difference in their bottom line, and doesn't really reflect what business is really about.
So you said in Q1 of 2017 they recorded a loss in terms of profit. Is that what you said?
Sorry, foreign exchange loss.
Foreign exchange loss. Okay, gotcha.
Yes,
gotcha.
And in the quarter 4, they recorded a gain. It becomes it make a big difference. So it become a distraction from what the underlying business is actually performing. Then in terms of costs, because you create videos, you need to spend money. They are also spending a lot. Similar to Netflix, you need to spend, need to invest. And if let's say you're investing in a tech company, maybe some investor like to see that you're actually spending a lot because you're investing in the business to build out the infrastructure,
right?
To build out the assets for the future. In itself, if the investment is fruitful, it results in say a very successful brand. Let's say like Angry Bird created this game, and then it's almost it helps not just attracting more gamers, but it helps into sell your soft toys, your other merchandise, and then also attract viewers to your movies and other videos.
Right.
So that is considered good investments. But if it's only for one series of show, then nobody remembers it, and
right.
you can't really capitalize on it, then of course it's not as efficient.
Well, and tell me, okay, and so do you have like, as far as from a valuation standpoint, I'm assuming iQIYI is, I'm assuming a lot of future growth is priced in. Is that accurate to say?
Oh, I absolutely no idea about that. You've seen my other articles where I like to also look into the fundamentals and trying to derive some valuation. But for iQIYI and all this recent tech IPO, it's really hard to give a proper, say, price versus the earnings, and try to do something intelligent. I do not want to be.
I assume that's because the PE is probably extremely high. And that's kind of I guess the more direct way to ask the question.
Yeah, exactly. Even go by this price to sales, I think it's not really meaningful.
Right.
So this is not meant to be a core part of your portfolio.
Right.
Just that if you like the story and then you really believe in this business, you believe in the numbers. Yeah, just you'll be a good speculative position in your portfolio.
So in Netflix, a lot of times people look at it as a platform type company, and so the more users, then that makes people think, well, that's the more valuable the company is. What is the user base for iQIYI, and what does the growth rate for that look like right now?
Actually, for iQIYI, is focused on the video streaming, and that segment of the kind of video watching is stagnating. I provided in the article that the big growth is coming from short form videos. And what I read is that Tencent is quite aggressive trying to capture this growth. And unfortunately for iQIYI, is falls under the live and game streaming, which you have seen in the graph in the article that is stagnating or even declining in some periods. This is not very a good picture for iQIYI, but you see that its paying subscribers is still rising very, very sharply.
Okay, that was part of my question. So the paid subscribers is increasing significantly. That's helpful.
Right. So yeah, initially, they'll rely on the advertising. People who are not willing to pay first before they know what they are going to get. So they they still can watch, but they'll be bombarded by, say, advertisements. So right now, as they want to improve their quality of life, and they're getting higher compensation from their jobs, they are willing to pay that bit more for interruption-free video watching. So you can see that they are still increasing their paying subscribers. But recall that the reader Greckos, he or she was warning that there's a limit to how much iQIYI or other video streaming companies can charge subscribers before they just turn away to other platforms.
Right.
I have an earlier article on Netflix and saying something similar to that. There are people are looking at Netflix and saying that, anytime that Netflix want to improve their profits, they can just increase $1 or so in their subscription fees. I read the history of Netflix, and there were periods when they tried to increase, and there were a lot of resistance.
Right.
So it's even it's not just for the Chinese market, but even in the US, I think $1 also can be sensitive if you just want to increase.
Right. Well, and I think part of what makes a company like iQIYI a little more challenging, or any Chinese-based company challenging for U.S. investors, is there's no direct, or very little or no direct experience with it, or the culture. For example, like if I want to look at Netflix or Disney, well, and I live in the U.S., well, I can use Netflix, and I can talk to people who use Netflix, and I can understand the role that it plays in culture, and what type of people will sign up for it, and why it matters. But in China, it's like unless someone has spent significant time there, or those people who have, there's much more of a black box dynamic in terms of really understanding the role something like iQIYI can play in the Chinese culture and why that matters, and how much does it matter that Tencent is aggressively targeting their market share? Are they really aiming at the same type content, same offerings, and is the market share so big that iQIYI can still be wildly successful and Tencent can be wildly successful in the same market? Those are things that I wonder about, and I don't know how well you feel like you could speak into some of those concerns, or just kind of shed more light into those things.
Yeah, you're absolutely right. And that's one of the reason of my caution. I did mention about Tencent and Alibaba having their huge treasure chests, and they may look at the lucrative market, and then they decided to spend more to capture the market share. And indeed, Tencent is on par with the iQIYI. Like some chart there in terms of the mobile MAU. Say Tencent Video is almost on par with iQIYI, because there's dated there's up to August 2017. But I think we can see the trend there. We're talking about Netflix as something that US investors or us, we can understand and appreciate the growth. But if you look at the share price history, if indeed the business is so easily understood and appreciated, then why only in recent months or years you see the price really gone up a lot? And why is it not something that investors already know, and then they chase the stock up in the early days? So I would say that even for Netflix, in a say transparent market like the US, it's also not a given that the market players or just retail investors as a whole, they understand what's in it for them. So I think there's not much difference in iQIYI in China. There will always be something that you do not fully understand or appreciate.
So you feel like, for an American investor to simply think of iQIYI as a Netflix type business, that really gives enough context. I mean, that is a fair way of thinking about it, instead of that actually, I guess, because the concern for me is that an overly simplistic way of thinking about it. I guess what I'm hearing from you is that no, if you go to China, it's really serving a very similar role as Netflix would.
Okay, no, that's not exactly my point, but
Okay, sorry.
just saying that if they are coming to look at the IQ, they can take it with the understanding that it's a video streaming. It's plain. They state it themselves. Of course, quarter to quarter, we have to keep monitoring the trend. Of course, not just taking the words of the CEO or the management, other executive on face value, but we do have a few resources like say. I have a chart from the Hill House Capital. The title of the chart was like the China daily mobile media time spent, and you can see some the long form video time spent on the long form video has come down, and then the growth of the short form video is exponential. Besides the financial numbers and what the company executive are saying, we can also look at external sources. They say Quest Mobile, they do provide data on the market. Then you see also a pie chart on the time spent on say video, game, news, and social networking. And essentially the time spent on video is encroaching on the time spent on social networking. Say let's say you are an investor in Tencent. So you may be wondering, so Tencent, essentially they have the very popular messaging app WeChat. So if they're spending less time on WeChat, would that be a threat to Tencent? And then they come to gaming. Gaming has maintained its share at 13%. And this is on top of the increase in the time spent on entertainment and media. Maybe you're a game investor like in NetEase, then maybe it's a good news. And so back to the social networking, even though the time spent as a percentage has gone down, but bear in mind that the overall entertainment daily time spent has increased.
So if I'm thinking about the overall investment thesis for IQ, and then risks involved, the investment thesis is it's a company with a potential growth trajectory like a Netflix, and it's similar to Netflix, even though the CEO of IQ really wants to pursue more of a Disney model in terms of content creation, merchandising, and advertising. But just in terms of American investors understanding the company, it's best to think of like maybe Netflix in the early days, but wanting to expand beyond simply streaming like Netflix has done so far. And then but also it's early days, and so in terms of valuing it based on fundamentals is really difficult. But the thesis is there is obviously a tremendous market. The market size is tremendous in China, and the middle class in China is growing, which means there's more and more people who are able and willing to pay for monthly subscription fees as opposed to watch for free and see advertising. But technically, IQ obviously can benefit both ways, but would prefer the subscriptions. So those are kind of big bullish thesis, big concern. Well, and also the fact that IQ, if I understood correctly, is focusing much more on short form content. And according to some of the research coming out on mobile, people are spending much less time on long form, much more time on short form, and less time on social and more time on short form video. Both of those trends significantly play into the hands of IQ. Biggest concerns, beyond simply execution, of course, like any company, would be, will Tencent or Alibaba view IQ as a significant threat, or simply see what they're doing and think, hey, we want to benefit from what they're doing too, and then come in with their big war chests and potentially just outspend and outcompete IQ. And that's really one of the biggest threats. Does that sound like a fair way of viewing the company? Am I missing or leaving something out?
Just a small correction. They are essentially the live streaming, not in the short form, but they definitely can increase their exposure to short form.
Okay.
Yeah.
So the live streaming will increase exposure to short form.
Yeah, so we mentioned about the Alibaba and Tencent, but IQ is not alone. It's actually backed by the BAT of the Baidu of BAT. As you know, the China have in the US we call it the FANG, and then in China they have the BAT, which represents the Baidu, Alibaba, and Tencent.
Oh, okay.
Yeah, Baidu is comparatively smaller, but still is one of the key player in the China tech space. And we heard a lot about the Chinese government being fearful of the domineering company. And they do not want any company to be too dominant. So besides the Alibaba and Tencent, I think they will want to make sure that Baidu has some space or some business in China as well. So I think iQIYI has a good backer in the form of Baidu. So
sure, yeah, that makes a big difference.
Correct, and Baidu is strength in artificial intelligence, and it's also trying to develop more in that space. So iQIYI will benefit from what Baidu has invested in and also come up with from their research. So it's not alone. That's my what I'm trying to say.
Yeah. No, and that makes a difference. And just to be clear too, would you say that Tencent and Alibaba are currently competing with iQIYI, or there's just the concern that if they ever chose to, obviously that would become immediately a significant threat to iQIYI?
They are already competing in some form. So yeah, but actually, you look at the various business of Alibaba and Tencent, they are almost in everywhere. It's almost to say that they will be a definite threat to iQIYI is just like saying Amazon will be a threat to anybody. Recently, they have gone into bought into PillPack and things like that. You say that all pharmacies will not be able to survive. That's a bit like what some reader will call it the FUD again.
Right.
So
So the Tencent threat is kind of like the Amazon threat.
Right. It's not that there's no threat at all. I mean, you shouldn't just dismiss them totally, but to say that they will just eliminate all the competitors, then that's also a bit too extreme.
Sure. Yeah, and that's helpful because that's like I was thinking of earlier. Like, I mean, even if my assumption is that iQIYI has enough momentum in there to place where, like for example, and this may not be a good comparison, but YouTube is having great success alongside of in Netflix and Hulu. Those are three streaming companies really in the US that are all, as my understanding, very successful. So just because Netflix is doing great doesn't mean YouTube has disappeared. And so, and again, when you have a market the size of China's, which obviously is bigger than the US, it seems legitimate to think that there's room for a Tencent and an iQIYI to coexist, even though obviously it'd be nice to not have to compete with them.
Yes, that's a good angle to look at.
Yeah. So again, and just summarize what you said earlier too, iQIYI company in the early stages with amazing growth potential. There are very real threats and a lot of uncertainties. Hard to really base a lot on fundamentals, but if someone wants to make a speculative position in their portfolio, then this, could be a good fit there. Is that a fair way to think about it?
Right. They'll keep it maybe say up to a year or a few years. You can see some gains, but I'm just worried that there are investors who are looking at this and saying that they can double or triple in a short time. There's even a reader who commented that they will hold it until it hits 300. That's like the 10 times the current price. I'm not sure the time frame if it's like 30 years. I don't know. If you're looking at this, say it's just looking at it for a year, I think this too optimistic and quite dangerous thinking.
Yeah. So really, and people expecting iQIYI to double or triple in a year are probably off base.
It could. But,
it could.
I mean, I mean, if it does so, then I think it's time to take some profit off the table.
Right, because it's that makes sense. At that point, obviously, it'd be going pretty hot and strong. But
the danger is that sometimes when you see it doubling and tripling, then people say that no, it can go even higher.
Yep. Then you start chasing it, and then the classic buy high, sell low. Yeah, don't do that. Well, hey, ALT, this has been a really helpful, informative discussion about iQIYI. Is there any significant thing about iQIYI that you're wanting to say that we haven't heard or thought about yet?
Okay, maybe I would like to point the attention to the recent short seller report on Momo. It's also another live streaming company, and there's a company called Spruce Point. They released a report on Momo, highlighting some
And what does that
concerns.
say? Could you spell that? Make sure I'm getting it right.
MOMO.
Okay.
The ticker name is also MOMO.
Okay.
Right. Investors who are interested in iQIYI may like to read the report. I also recently published an article on that particular report, and there are readers who commented that it's not worth the effort to counter what Spruce Point was trying to say, because they deem that there's not much substance in what they reviewed.
Gotcha.
But I guess if you're really interested in this space, then it's worth some time to look at what they are trying to tell us, and then do your own research as to whether you agree or disagree. I mean, it doesn't cost us anything to read the report. Of course,
sure.
We know that they released the report because they want to profit from a short position, but this is beneficial for us if we want to understand more about the market, about how the other players may be thinking in terms of, say, when there's a similar report for iQIYI, how would you react? Would you be calm? Because you look at the Momo price trend, actually, it didn't seem okay. I did have a chart on it to compare with iQIYI and also Huya, to look at how the short report has actually affected it. But looking at the price trend, it didn't seem to be particularly affected. So it's more of the report was released last week, so it was more of the general trend in this space, rather than because of the release of that short selling report.
Right.
As the investors, it seems that for Momo investors, it seems they are not so particularly worried, and perhaps they already know what was coming, and so in that sense. So, but for iQIYI, it's still a new name in the US market. So investors who wants to be in iQIYI, they have to be prepared that such report will come, because of all the concerns that we have on iQIYI. Are they actually prepared to hold it, or will they sell immediately on news, and then will they regret if the report has turned out to be just FUD again? These are things that investors will have to be considering.
Excellent. I'm taking some notes. Awesome. Well, hey, ALT, thank you so much for giving us some of your time today, and for all of your work on iQIYI and other companies, and all your contributions to Seeking Alpha.
Yeah, thank you for the opportunity to be on this.
Absolutely. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice, and does not constitute an offer or an invitation to make an offer to buy and sell securities.